Oh man, so Bitcoin tumbles 5% in a single hour as $20 billion of market cap are wiped off crypto's biggest currency. What is going on? Is there further pain to be experienced? We're going to break down the charts. We're going to look at the different levels and also what is causing this pain. Smash the likes. Don't forget to subscribe. Guys, as we covered yesterday, there are a bunch of negative catalysts, both macro and crypto specific, which were weighing on this market. And hours after I posted this video at 1 a.m. my time, we saw a devastating 5.37% down here on Bitcoin, driving the price as low as 21,900 since. We've recovered a few $100s here over the subsequent few hours, but this is really painful. And the first thing that's playing on markets right now is the issue around Silvergate, one of the biggest banks in the crypto space. They issued a warning saying they are struggling to operate as a going concern, and this is really shaking markets. Silvergate opened up trading down 58%, and markets are feeling very jittery. If we take a look at the liquidations, guys, $62 million worth of eager longs liquidated. Remember, this happened during Hong Kong Asia trading time. We've seen a lot of YouTubers recently talking about this Asian pump, talking about a lot of momentum in Asia. But remember, those greedy longs are what will keep continuing to create cascading liquidations and creating a lot of false start momentum. And this is something I've been talking about a lot on this channel. Guys, we are not out of the blue until we reclaim our weekly EMA ribbon. Let me pull that out for you and show you guys. This is the weekly EMA ribbon, and so far this week, with 2 days 8 hours left before this weekly candle closes, the bears have delivered a devastating hit. I mean, let's face it, we've had 2 negative weeks here after our pump. We managed to deliver a bullish engulfing candle, but something didn't quite feel right. We weren't managing to clear through 25. I shared that with you guys. On top of that, January's data in terms of PPI inflation, CPI inflation, PCE inflation did not look good. Then a couple of days ago, I shared with you that we got some early Feb data for the US economy. Did not come out well in terms of the ISM manufacturing index and the prices paid, and this has got markets worried. On top of that, as if that is not enough, oh my. On top of that, what else do we have, guys? We spoke yesterday about Mt. Gox. Mt. Gox will be releasing about 140,000 Bitcoins onto the market. What impact is that going to have in March? We've also got the Shanghai upgrade for Ethereum, allowing people to finally, after 2 years, unstake the Ethereum, which could create a lot of sell pressure as well. So I did warn that March could be a tremendously volatile month here for crypto. And more importantly, it shows that the bears are awake. All this time, a lot of these bulls were suddenly claiming $100,000 Bitcoin and all this stuff. No, we were in a relief rally. We were in a bear market rally going into our EMA ribbon. And I sustained that throughout. And I said, until we close our weekly EMA above this, I do not change my tune. We are not out of the woods until we close above and show meaningful growth past this resistance area here. And we haven't. We're getting rejected from here. The bears are alive and kicking. So it's going to take more work for the bulls to step up and take over this level. I'm going to share why it's not the end of the world just yet and which level would get me a little bit more apprehensive. I'm going to share that with you guys shortly. By the way, if you're new to TA, if you're unfamiliar with the EMA ribbons and all the patterns we talk about in these videos, ijaz.uk/TA. I made my TA course completely free. So definitely, guys, take advantage of that. Link is in the description. Now, here's what's a real downer today, guys. Remember when Bitcoin was running recently over the recent few days? We saw that Bitcoin was running despite traditional markets. We saw days where dollar index was rising, but Bitcoin was still rising with it. And so there was a little bit of a decoupling. Well, that's now going against us because we've got a day here today where the dollar index is down 0.2%. Doesn't matter. Bitcoin is down over 4.8% at the time of recording this video. US 10-year has also cooled down, just slightly getting rejected here from that 4% mark. This 4% mark is very important for the US 10-year, okay? We do not want this climbing above 4 and going to its previous peaks back up at 4.3. This is a sign that risk is rotating off, people have no confidence in the economy, and that is bad for risk on trades, including tech and Bitcoin. That's where we fall in that category, with risk on, Bitcoin, crypto, altcoins, okay? So we need this to call off. Now, the reason this is starting to spike It's because more and more of the market, you can see here, 30% of the market have been pricing in 50 basis points at the next meeting. I've shared my view that I personally don't expect 50 basis points to happen. I think we're going to get 25 basis points. Now, if we jump on over here, you can see yesterday that Atlanta Fed President Raphael Bostic said he thinks that the central bank can keep its interest rate hikes to 25 basis points rather than the half-point increase favored by some officials. Then Fed Walla came out and they struck a tougher tone, right? They said if those data points continue to come in too hot, the policy target range will have to be raised this year even more to ensure that we do not lose the momentum that was in place before the January data was released. So this is what's important, guys. This is the battle that's going on right now, and this is what is creating the commotion that we're experiencing in the crypto and wider markets. You've got on the one side people saying, hey, Jan was just a blip. Don't worry about it. Feb data is going to come out great. We're going to be back on track. 25 basis points. We're good to go. What are you worried about? On the other side, you've got the bears who are saying, no, this does not feel right. Europe inflation sitting at 8.5% still. We just had bad data in terms of all the CPI and PPI figures in January. We've looked at the manufacturing data. Doesn't look too good. We got non-farm payrolls in 7 days. If that shows wage growth is going up, that's a problem. Then on the 14th, we got our CPI reading. And then on the 22nd, we got the FOMC meeting. And what if Jerome Powell does 50 basis points? That's what the bears are saying. And that is why we're sat in this stop-start market, which is creating a lot of frustration. To ladder in on top of that, you've got crypto-specific issues. Yes, the Silvergate issue is a crypto-specific issue. The Mt. Gox issue is a crypto-specific issue. The Shanghai upgrade unlocking ETH is a crypto-specific issue. So you've got at least 3 important crypto-specific issues weighing down on the price of Bitcoin in March. And on top of that, the macroeconomic uncertainty, which I've just explained. Now, all of that, when you sit on the day chart, you would think that we would be in a horrific situation right now. But we're still hanging on. Look at this daily chart. What do you notice here on this daily chart? We've got a high. We've got a higher high. We've got a low. And dare I say it, we are still just barely holding on to a lower low. And that's a higher low, sorry. We've still nearly got it. If we turn around here, we've still got a higher low. We can take that, go post a higher high and keep going here on Bitcoin. Now, do I think that's likely? It's very unlikely. Like, the bears are in control in this short-term time frame right now. On this daily chart, the bears are trying to close below this EMA ribbon. But they're not quite there yet. So far, the dip has been bought a few $100s here. You can see where we wicked down all the way down here to 22,000. Do you see the support that came in? This is the wick. Again, Ijaz.UK/TA. We go through all of this, how you analyze this. That wick is not a coincidence right now. People started buying the dip here after the liquidations happened, after the 62 million of liquidations I just shared with you. When that happened, that big orange line there versus the normal lines we normally see, 62 million liquidated, guess what? People started buying the dip around that 22 mark. So it's clear that the bulls want to step in at 22. And it's no surprise. 22 is a very important level. That's their channel, right? That's our channel, which we've been monitoring for a very long time. The top line of the channel at 22 and the bottom at 18,700. We know that's an important level. And long term, if Bitcoin wants to do this and bounce and then go work for a bigger high, that's also fantastic as well. So that 22 level, I personally like as an opportunity to buy the dip, and I will be nibbling at around that 22,000 level. Now, the danger happens, the more worry, the thing that's going to give me a few more heart palpitations and maybe, well, not a sleepless night, but just get me a little bit thinking is if we lose this low. And if you look at this doji candle, the low of this doji candle was 21,300. That's where we reversed off our EMA ribbon and ran all the way up to create our local high here of 25,200. If we form a lower low, if we come lower than those levels, then we have to worry. Then you're going to look for consolidation around 20,000 as our next level of support, and failing that, then you're looking at 18,700. So the bears want to do that. The bears need to push through 22,000, they need to push through 20,000, and they need to work their way to 18,700. That's what we're looking at here on the short-term time frame. And that's not going to be easy for the bear. But one thing we do know which works in the bears' favor is that weekly time frame. They've got this time frame. They own this time frame, and this is what's important right now, is on the longer term time frame. If they can plug in a couple of red weeks here, they'll feel confident that they can start driving us back down to some painful level. But let's switch over to the 4-hourly chart. Yesterday, we were speaking about this. What pattern are we in, guys? We are in this ascending broadening wedge, and we have been for a while. And what did I say? I said yesterday we were characterized by this upward trend. And literally after we posted this video, I said, guys, we cannot risk falling from this trend. And exactly that happened. We broke this trend line and we fell. There's a little bit of support that comes in around this range. We've managed to rotate so far at this point here, but I think we may need some more. We may need to come to 21.5. You can see that's important support for where we picked up around the middle of February time. That's where we needed to gather support from the bottom of the wedge, and then we had another big run. So will support coming from here, or will it need to come all the way down to 20,000? Either way, we're now in the bottom half of our ascending broadening wedge, which favors the bears. So the bears have done some good work rejecting us from the top of the wedge, but at the same time, from the bulls' perspective, they can just claim, it's okay, we're resetting our RSIs. Because if you look at the RSIs, they were extremely overbought when we entered our ascending broadening wedge, and now they've had a major calling off. Just like a sprinter can't just keep running at 100 miles per hour, right? They need to call off, take a rest, and then go for another 100-mile sprint. The bears will be backing themselves, the bulls will be backing themselves, to do that. So they've reset the RSI. Can they now step back up? Is it at 21.5? Is it at 20,000 flat? And then get ready for its next move. Pay respect to these bears. They still exist. They're still around. But at the end of the day, we're still in a far better position than we were just months ago when we were sitting at 15,500. Don't forget to go watch this video here where I discuss whether 20,000 H-bar or 20,000 Cadena tokens are a better investment. You're not going to want to miss that one. And I'll see you in the next one.